Hey everyone, welcome back to the Crypto Crumbs. Today we'll be talking about Cardano ADA. ADA recently has been doing quite well in relation to Bitcoin. We just in about 1 or 2 weeks after the recent cryptocurrency crash. Wow, yeah, a lot of cryptocurrencies look really bad, but I would say that Cardano is one of the more better performers of the post crash of cryptocurrencies, right? This video will be a technical analysis of where Cardano would go to. These are basically my lines that I've drawn on Cardano in the past few days. There's been very very good adherence to these Fibonacci lines. Okay, so you can see one of the best ones I can tell is actually this level 1.89. This is a very good level in Cardano, right? What I did actually, I was trading this level. I shorted this point right here all the way down to I would say, I think the first take profit was around 1.48, which is also a very good level. Unfortunately, I can't really tell there's any highly precise rejections of the 1.48. If I were to go to the hourly chart, you can see it more clearly, right? The 1.48, there hasn't been a lot of precise rejections, but I would say that the best levels that we are in right now is 1.89 and this very bottom, which is a 1.03. 1.03 is a very good line too, and I think if there was another Bitcoin dump, okay, we would actually see Cardano back at this level, okay, and I don't think it will go even lower than that unless the market goes really low, right, all the way down all the way down to like 20k Bitcoin, that kind of stuff. We might be able to see 0.83 Cardano, but I would say that's very unlikely. Probably the lowest that Cardano would go to right now reasonably would be 1.03. Okay, currently Cardano has rejected this level 1.89 again, right? So there's ones here, it went like sideways a bit, then it went back down to here, went back up to here, 1.89. okay, and you can see there's a good rejection right here, and then it dumped like all the way down. Now another level that you want to take note of is the 1.65. This is a very good level. I drew this level only a few days ago, but you can see there's a lot of really good rejections of the 1.65, which then improves the legitimacy of this 1.65, right? So this is a very good rejection. You can see around 25th May there was a precise pinpoint rejection here, okay, and you can see another rejection somewhere around here, right, 1st June, and then another one in the recent correction, okay, in 4th June. So 1.65 is actually part of a bigger Fibonacci level, Fibonacci retracement pattern, okay, and this includes the 1.999, which is the 2.0 level, right? And this is coincidentally, this level was actually the point where ADA dumped in the previous crypto crash, right? So this is exactly the point where ADA went down, so this is a very important point too, 1.99. And then there's another level even above the all-time high of Cardano, which is 3.12, and this is a very important point. If let's say Cardano takes another all-time high, the next price target for Cardano will be 3.12, but I do not think that will come very soon. Okay, I'm actually quite a supporter of the bearish scenario. Okay, so I do not think that there will be a V-shaped recovery of the cryptocurrency market, which is fine. I mean, I'm okay with that. First of all, most of my cryptocurrency portfolio is in Cardano, so I think Cardano is a very strong coin. But then again, I do not think that Cardano would really get an all-time high in the next few months. I don't think so. I think Cardano will be trading sideways for the next few months. Okay, so anyways, another thing I want to point out is Cardano looks to be, and I'm not exactly sure this is the case, but it looks to be forming a what they call the Wyckoff accumulation pattern. Okay, so you can sort of see it in the 4-hour chart. It's quite obvious actually. So you can see, right? I will bring out the picture of Wyckoff. So yeah, it starts off with a very big crash down to this level, and it goes back up. Okay, and then it creates this weird pattern, the ARST pattern. Okay, which you can see in Cardano, right? This is the one that I'm talking about. So it goes from here to here. So ARST. Okay, this pattern right here is actually caused by market manipulators. So big whales. Okay, we don't know who they are, right? I mean, they could be banks or governments or who, we don't know. But this pattern right here, which does not conform to Fibonacci geometry, right? This is a very weird pattern. Like this is not something they can really predict, right? So this is actually caused by market manipulators. So anyways, the pattern goes back up, gets an all-time high before crashing down. And I think that would happen very soon. Okay, so I'm actually quite bearish on this pattern right here. I believe that the price would probably go down quite hard, right, in the next few days. And at the same time, you can actually see more closely, there is a Fibonacci gun level, Fibonacci gun cross, okay, coming in like what, 1 day, okay, in 1 day's time. So these levels, right, where the Fibonacci and the gun levels cross, okay, it's a very powerful rejection level. Okay, so it either goes up or down very violently. So in my opinion, I think it is going to go down, right? It's going to go down hard. So it's going to complete this so-called Wyckoff accumulation, right, where it goes like all the way down to the bottom, and then it tries to create like a so-called bear trap at the bottom right here. So I think this could be what we're getting in the next few days. Yeah, so I'm actually quite bearish in the next few days, but at the same time, like the Cardano coin, I don't think it's going all the way down to like below $1. I don't think so. Okay, so if you were to go down, I think the maximum you would be at is probably like around this level, right? $1, around the $1 range. So yeah, if you like this video, like and subscribe, and thank you so much for watching. See you next time.